Welcome back. Okay, let's see what's going on here. If you could provide Discord, let me know. Can use the old Discord stream. What if I told you that when you turn on your nightly news, you know, they're always talking about the Dow Jones Industrial Average, and they've got no idea there's any other things out there in the market. There's going to be normal, everyday people that are going to be watching TV tonight. They're going to go, wow, market's really up today. No clue, because they're just looking at that Dow Jones Industrial Average. They're like, wow, market's doing pretty decent. No clue. No clue that tech is getting absolutely pummeled. Short tech, long value. That's it. Long value, short tech. There's nothing else to it. Nothing else to it. Small caps continue to outperform. The value side continuing to outperform the growth side. Travel, banks, energy, REITs, killing it. Healthcare, absolutely destroying it. Again, if you're in any of these healthcare, you didn't have to do anything. You could still be sleeping right now. How many of you are like going tick, 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 trying to look through your charts? You could just be doing nothing. Doing nothing. Don't have to ask any hard questions. You're just in position. What are you gaining on something like this today? 70, 80%? Maybe 50 if you're really long term. It's pretty easy on a day like today if you're in this side of the market, right? If you're on the right side of the market, this volatility is basically a gift. Basically a gift. It's a gift. Are we having a yields problem right now? It doesn't seem like it. Again, this would certainly have started. I think it would have started. It would have already started, right? If we were going to be going and there was going to be a problem and people didn't believe in Powell, in his ability to just say, hey, just calm down. That's all he's got to say. No, there's no problem. We're not going to change the rate. What if he does say we're going to change the rates early? What does that mean? That all the money's going to go into value anyway. That's the best part. The best part about the positioning that we have of going onto the value side is that no matter what he decides to say, whether he wants to cool the yields or not, the yields increasing are good for our positions, whether they continue to rise or if this is just a random spike and it caused a little bit of volatility. Both end up with the same result for us. Maybe we get there a little quicker on banks if they do change the rate sooner. We're doing well on banks, up on banks today, right? Continue to be up in banks. So this is one of those situations where you don't need to bet on a result, right? We don't need to bet on one or the other happening. It's just already happening, right? It's just already happening. So, seems pretty good. How are you guys doing? What are you guys doing today? So far, anyway. I mean, none of these positions have moved since lunch, so everything we looked at since earlier, nothing's really moved besides tech continuing to sell. It is holding that zone of support. Could it go further? It's holding here, but it definitely could. I would say this is the top of the volatility, though, because, again, tomorrow we get the OPEC meeting and Powell speaks, and that is sort of an event that we're looking at it as an event, even though it's just another time that Powell's speaking. We are looking at it as though an answer to the volatility in here. But again, this is tech, and then you just go look. You go look. Take a look around the market. If you're not beating the death bout average, yikes, right? You're on the wrong side. Imagine sitting in positions and wondering what you're doing. It's like it's like long-term investors or passive investors saying, well, I have long-term value, but they're down on their average. It's like if you bought gold, right? It's like gold. Okay, you could be in gold, right? If you bought like a year and a half, 2 years ago. Not if you bought anywhere within here. You're not going to sit in that, right? No, of course not. So why would you do it with tech? Why sit in this if there's an event going on? There's this understanding of value, reinflation, the economy coming back, people going back to work, getting vaccinated, not dying from COVID. If there is an idea there, and there's a trade that's available, then no matter which of those things happen, and whether or not there's velocity on that event happening, the economy picking back up, it has the same net result, just a different bit of timing, but the tail end is the same, then what is the point? You're seeing it, right? Again, there's a lot of positions here that we understand as being technical, not tied into anything value related. Again, REITs sort of dominate some of these, energy sort of dominates some of them, but there are positions here that are unrelated to the idea of value or anything like that. Something like SATS from yesterday that I posted chart, take this trade today, has nothing to really do with any of these. They're not macro ideas, completely individual active trading, right? Completely individual active trading. A lot of energy things still are dominating. But what about like Lyft, right? Lyft, Uber, taking this trade today? No, this has nothing to do with anything. So again, this is just about being prepared, ready to take the trade when it's there in front of us, right? Retail stores are tied into the economy, but these have been really all over the map. They're on different schedules, some of them leading, urban GPS. These kind of trades led the way. Things like M are now moving, right? And again, these moves, even today, you're talking about significant points on the options, right? Significant points on the options. So again, there's plenty to do out there. And a lot of these numbers are pretty damn good, right? A lot of the numbers are pretty damn good on today. And really with options, it's just, you're just being given a gift. If you're in positions, the volatility again is just, it's basically giving you free points on your position for doing nothing different. You're just in the same position. So again, you can decide for yourself whether you think tomorrow Powell's going to basically say, no, this is the fucking end, and you guys are all fucked. So if you think that, then you should just sell everything. Does it look like that's what the market's doing, or does it seem like the market's making smart decisions based on what we see in the bond market, to make then decisions in the equity market that lines up with those? Or do you just make decisions with your portfolio that are completely at random, where, okay, we're going to sell bonds to then do what? What are you going to do? You're going to, what? We're selling tech. What are you going to do with that money? Is there a goal with the money or no? Well, if there's things going up when other things are going down, I've got a feeling I know where that money's coming from, right? So again, it's very straightforward. We don't need to do anything complex. We understand the flow in front of us. Take it as is. That's what it is. You don't need to make it more complicated than it is, right? You see something going down and then something going up because of it. That's fucking what it is. The money is right there in front of you, right? The money is right there in front of you. Is there a little bit of jump on the dollar in relation? Yes, but is this right here, all of treasuries being sold and all of tech being sold? The DXY is up 20 basis points. Is that equal to the amount of money that has outflowed from tech? It's not even close. It's not even close. Nowhere near. Nowhere near enough. So again, we understand the flow because we can see it. We have it mapped out. What do we do in terms of our positions pushing further into the week? We understand that there are some macro events coming up. OPEC, Powell tomorrow. We have job numbers on Friday. We understand there's a little bit of risk there, that there could be some neutrality, that we need to react accordingly. So if your tickers that you're trading are tied more to the macro side, we have to, of course, be respecting that. But in a lot of these situations, there is no, well, let me just get out now because I'm not sure. None of these situations make things unclear. Clarity is still there in terms of value over growth and the trend. There's times when we think of transitioning, maybe we're a little bit more sensitive, maybe we get stopped out a little bit sooner because we understand it's a little bit more, it's certainly more sensitive in terms of entries and exits right now. If you did not enter at a good point, you entered late, you're feeling the effects of the volatility now because you bought at a higher volatility with a higher premium because of that. So you didn't gain that premium through the volatility, right? So there are times when that could be affecting you. But if you're buying in at the right points, buying in such as on Friday last week, coming into this week, then you've probably slept through most of the week. You continue to trade things that are trending to the upside. You don't really care what Powell has to say or what the job numbers are because it's been the same fucking thing every week. There is no difference. Nothing has changed. Nothing really should change. The market, again, is pricing things on another side of the market, which is bonds. Yields have not moved since this morning, which removes a lot of the fear which would come from a liquidity event in the bond market cascading over to the equity market. Sort of like what we saw before. Right now, all that's happening is rotation. And we understand the rotation. So again, the fear is sort of a headline kind of fear, right? An anxiety that is headline driven and not in the sense of what we're trading, right? So we do not get shaken out of our positions. You're looking at your positions and you're watching your P&Ls go up, then leave it be. Let it be. Let that be the result. If during lunch you get a pullback, then understand it's lunch, right? So again, today's a good day to continue to, as long as you're following through with your rules and not letting something more emotional dictate your decisions, then you are certainly getting paid for it. You're getting paid not for, again, you didn't do anything risky buying into this week. You bought something this week, you're not some risky gambler. Maybe if you bought tech, you did. That's ridiculous, though. That would be ridiculous. So we're going to watch volatility here in the last couple minutes. Last minute, and watch tech here. See how well this does into the close. I mean, this is the last really last ditch effort. Below here is darkness. Hello, darkness, my old friend. I can't really see the market allowing that to come down here. It's coming into the deepest part of, again, coming into, just like we talk about pushing risk to the furthest point. This is really the furthest point. There isn't, if this comes down here, then, that's going to affect every average. So we have to be aware of it. But even if there's a little bit, we'll call it a little bit of a zone to 308 and a half or so. Give it a couple points, but it's not going to happen. It's just not going to happen. SPY, I just don't see it. I just don't see it happening because, again, what's going on in the market right now, it's a rotation. It's not a outflow from the whole equity market, right? It's a reaction to yields. So the market's closed. But again, what's doing well? The value side is doing very well. So again, continuing to trade through travel, energy, banks, REITs. Those of you that are still trying to watch other things and you're getting pounded and you're losing money, you're just not. I don't know what you could possibly be doing. I don't know what you could possibly be doing trying to make things that are going down work when you have so many things in front of you that are working and doing well. And because they're doing well, they're going to turn into momentum trades. They've already basically turned into momentum trades, but a lot of these are going to continue to gain and gain and gain and do better and better. Aerospace and defense, this entire sector as well, right? We continue to talk about this. Again, if you're trying to make something else happen and you're trying to time the dip on tech or something, yes, tech will come back. It's really simple. Yeah, in a couple months, it'll be up. Gold in 1 year from now will be up, most likely. But do you want to lose money for that whole amount of time? Or do you want to make money during this time? Do you know how much this is here? Do you know how much some of these are? If you bought things on Friday, you made at least 100% on any of those positions. Or do you want to lose like a few percent every week? Again, it's really simple stuff that you don't want to be wrong and you stick in dumb positions. Especially you guys with bigger accounts and everything, you guys need to just be serious with yourself. If you're in dumb long-term trades and you're trying to make them work, that's what it is. It's literally you're wasting money. You're trying to prove your own self right. That a decision you made maybe 6 months ago, and you're trying to still prove that to be right it's just ridiculous. It takes 2 seconds to get in and out of those positions. Unless you got $1 billion account, it takes 2 seconds. It's ridiculous. To continue to ignore this point, and I'm going to keep saying it, to continue to ignore this point, the market isn't ignoring it. There's other people that are ignoring it. No one's ignoring it. No one's ignoring it. Everyone's trading it. That's the reality. Yes, the rotation's happening because there's more and more money coming out of tech to go into value. But again, we've been doing this for such a long time now. If you continue to ignore it, you're just missing points for no reason. You're literally being offered money and you're not taking it. That's all it can be. So I'm going to look in the profit section in a second. These type of moves that we've been talking about, if you're not making them, then you're just flat out wrong. You're just wrong. You're not taking. This is the simple trade. This is not a complex trade. We're not doing anything complex, and again, that's sort of against my type of trading. Even though we understand things in a more complex way, we use a lot of different fancy stuff. Your favorite word of verbiage, even though that's the case in a lot of senses, that's not what this trade is. This trade is completely macro oriented. It is fully macro oriented, which in our space we use very micro sort of marginal sort of decision making based on levels, right? Support, resistance, trend line, that's it. This is a macro idea. This is all flow based, right? And we've been doing it for months. So we're going to look in the profit section. Again, this whole trade through here, continuing consolidation here, but what's not being captured very well in here are the positions that we're within, right? So we don't trade the average. So again, I think it was a really great day. I think there was a lot of chances to continue to take advantage of, and I've got the options on my screen, so I know the percent. So let's see, what do we got in here? Ecto with the break even day, perfect day there. Brian Glizzy with the $49.99. I like that number. Positive on the day. LSU with the plus 885. That's a nice number. That sounds like quite the number there. Not sure what's in there. C Trader minus 400, blew an entry, stopped out of 3 positions. Seems like he's trying to force something there. Like to hear more. Met with a plus 70. That's a nice number. Anything that was above the average, again, would be good. What I'm not seeing, though, are numbers that are indicative of basically all of energy, all of banks, all of travel, all of REITs, all of aerospace and defense. So basically the 5 top sectors that I've been talking about, I don't see those numbers there besides maybe LSU. So again, just to be critical and to be a bit of an ass, unless there's some other reason and you try to force something else and that was why, then it doesn't sound like you guys are part of those trades. Which, again, if you're not, then you're just doing something wrong. Because you're not being a part of a trend that, again, continues. And today was not an exception of that. Today we had about 200, 250, 300, 350, 400, 450, maybe close to 500 tickers that were above break even. And all of the top heavy ones, again, being those value tickers. So again, there are points out there. You don't need to force anything. The end of the week here is going to be very interesting. That's where, again, you're looking for transition ideas. And you know, possibly another Friday to remember buying on dips. If today was Friday, that would have been, it would have lined up very well. But again, we have events and everything else. And then again, the thing to talk about with healthcare is here, I can see that none of you are a part of the healthcare moves. Maybe LSU there. And none of you are part of the healthcare move, which again is something that I've been leading up to even months ago. You gotta, if you're not in these trades, like I said, if you're not in the long term on these trades, it's just, you're really pushing the timing of when you can get into these, because again, we're going to get trends coming out of these and they're going to be very macro oriented. The problem with with it is that on the option side, the speculation is already happening, right? The speculation has already happened, and you're seeing that on aerospace and defense, for instance. We've already sort of seen it in travel, but even travel has enough risk in it that you can still get 50, 60% every single day on those. So, again, it's money on the table that maybe it's becoming too much of a... It's happening maybe too much, that maybe you're continuing to miss some of them. I don't know. I'd like to definitely hear, because I think your numbers are very different from my numbers. You're very... it's not very close. It's not very close in terms of... The ebb and flow was pretty close. I think yesterday makes sense in terms of the numbers. Monday obviously made a shit ton of sense. Everyone bought on Friday. Maybe you guys took profit on Monday. I'd like to hear. I'm curious. I'm actually curious. I'm guessing a lot of you took profit Monday, and so it ended up being not in many positions right now. I'd like to know in terms of cash and everything. Maybe this is something, because in terms of my understanding of retail right now, you're either, as a retail trader, you're getting absolutely fucked by tech, which is basically 99% of retail traders, I'm guessing, continues to try to force this idea and getting boned by tech. Otherwise, you're on the other side of retail that is just buying some of the sort of through our lens of trading, which is through this value idea of trading travel and all these things. If it takes one look at those options to be like, holy shit, I can make 50, 60% every single day on fucking XLE. Holy mackerel. Wow. This thing moves 3% and I make 60%. Holy shit. You look at banks, you look at travel, right? Healthcare. Fucking, you could trade Berkshire and make 50% a day on the options, right? So, again, these are very... I find it hard to believe that, you know. So, yeah, I'm going to be a little more critical today because, again, people should be taking advantage of this time now. I hear a lot of talk about, the volatility going on. So, for instance, for Momsky's comment about volatility, right? These are the times that we buy, right? We buy with the volatility here. So, for instance, Friday, right? We had the elevated volatility on Friday. Coming into Monday, this drops, right? Now, this is correlated to the negative side on the S&P, right? This here, what are these numbers? These are coming from yields in the bond market, coming from bond market yields, right? Now, of course, not everyone understands. You don't need to fully understand the bond market yields. All you need to understand it's a different market, right? It's just a different market, and it leads to value, reinflation ideas. The volatility that's here is not stemming from the trade, all of the tickers that we're looking at. That's the difference. So when we look at, it's like you could sit there trading, you're trying to trade, let's say, the travel sector, right? But you're looking at the Qs, you're looking at NASDAQ. Are you going to let the NASDAQ coming down and volatility going up affect your decisions on there? No, of course not. That would be ridiculous. This actually benefits you. This benefits you, right? And so what I would say for anyone that's looking at volatility is maybe a negative to the type of trading that we're doing. It's actually a net positive, right? It's actually a positive, and it's actually making it better and better the more volatility there is, especially when it's in this capacity. Money doesn't want to be on one side, it wants to be on the other, which is your side. And when I say your side, I mean my side, which is our side, right? In terms of trading, because again, we're looking at specific tickers and sectors, which again have continued to get confirmation of these ideas. When you see something like TGI continue here today, this kind of move of aerospace and defense, all this is a part of a sector, which again, you can go through them. It makes even BA look good, right? Now, of course, there's a bit of a pullback, but this is up 2.5% today. Do you know what you're getting on these options? Again, I think a big problem is maybe you guys need to go look at some of these options. Go look at the options on some of these charts, and I think you could day trade them. You could really just day trade them and be getting 100%. 100% if you just traded day trades. Now, that's not good enough for me in terms of the way to do it because you're not going to be able to get enough position in there. But you could still do it on smaller sizing. So I would, I'm trying to think. You just got to make fucking trades, guys. I think that's the majority of it. I think you guys, I think you guys are maybe pussyfooting around a little too much, to be honest with you. I think you need to, when you're watching price, stop watching price and just make a trade, right? You just have to make a trade. It's not always gonna happen when you take the trade, right? Like Mopsy says, I enter and I get stopped out. Yeah, that's gonna happen, but guess what? You can say that for every time price goes up 10% on the underlying on a day, it will do that. That will happen. If we go look over here at some of these trades, right? Let me show you on the so for instance, something like today. Okay, Lyft was a trade today. Let's go through this real quick. I don't think we need to go through all the macros and stuff. What about this trade here? Okay, we talked about we'll take this Lyft trade. So I'm going to use this as like a bridge. We talked about we'll enter Lyft if it breaks this supply here. Now it gapped up and broke it. So we want to be a part of it. As soon as it gapped here, that basically, if we think of it as a signal, it broke our resistance level and we want to be a part of it. What happened here at open? Let's think about it from a macro angle. Okay, yields are bursting through open. So there's a little bit of weakness in the beginning of the open, right? A little bit of weakness. Can we take this trade from open? Okay, you can take this trade from open. What happens? You get stopped out. Through all of this, you don't force any trades. When do we take a trade? When it tightens and the bids go to the upside. This is extremely easy to see on this chart. That's why we're going to use it. There is no question whether you're watching this. Let's go through like on the replay. This trade, whether you bought in from the exact opening candle here. This is the 5-minute. If you bought in at the opening candle here. Hold on. Fibs is saying, where's the thing? And he's not looking. Here you go, Fibs. The YouTube thing is certainly throwing people off. You'll get it. Okay, if we look at from Lyft, right? So for everyone, we were talking about this trade, right? And then we brought it up at open that we want to go look for this trade. So if you're looking at it from the open here, right? How do we enter this trade? Let's say we enter here from the open and we want to fucking be a part of it. Now we know, first of all, that the market, in terms of a whole, is having there's a little bit of anxiety to start the day, and it's going to probably take a moment, right? This also gapped up 5%. What happens when you gap up here? You're going to take profit a bit from here. So you're going to be patient on your entry here. Let's say you're aggressive as fuck and you enter immediately. You get stopped out. Okay? You get stopped out. Now, you already know you need to wait for a pullback here. These are 5-minute candles, by the way. 5-minute candles, by the way. This right here is what the market looks like. This is what the market looks like from the open. This is exactly what the market looks like. Now, I want you to figure out from here, when would you be able to enter this? Well, we want to enter this. It broke its level. We do want to enter this. And what's also happening here, if you compare this support down here, right? There's support right down in here. Also with the Uber chart, it's right on support. Let me just show you real quick. This is the Uber support down here, right? These are both in the same spot. They both have support, okay? Where's the candle? Okay, there it is. They both have support right in here, just all these candles down here, right? So right over here, what are you looking for? You're looking for tightening. What happens on support? There's buyers and there's tightening. You tell me the difference between these candles here. Can you objectively look at these candles and tell me when there's tightening? Is this tightening? Is this tightening? Does this one tighten? Did this one tighten? Did this one here tighten? This candle looks like it tightened. Okay, even if you don't buy right there, right? You want to buy, you get stopped out in here. Did this go from tightening to selling to tightening to bid? Even if you bought up in this part of the candle here and you bought 5 minutes late, from this point here when you have entered, right? Are you entering too late? Is it too late now? It's gone up 70 basis points. It's almost 1%. Did you enter too late here? Let's say you entered at the very latest point. What about this candle here now? Is it now, do we need to take profit from this point? Is this, it's dangerous over here. Is that, no. I think a lot of this is that there's just this expectation that because other things are happening, it feels like, oh, I don't know. I don't know if I can. It could go down. It could go down. If it goes down, then you get stopped out. If it goes down from here, then you get stopped out at wherever you entered, or if you entered here. Some of you, I think, get stopped out because you just place really shitty stops. And you probably don't even get stopped out. You probably sell yourself. You probably sell yourself. I highly doubt you guys get stopped out. Why? Because if you get, I know what happens when a stop gets triggered because I can see stops in the market. When the stop gets triggered, then you're filling a market order. If the momentum is going to the upside, then you're not getting stopped because there's no fucking sell orders down here. No one, or there's no bid orders like that. If you're buying when there's tightening and it leads to the other side, you're not getting stopped out. That just means you're entering at the wrong point. That means you guys are buying at God knows where. So again, that would come down to your entries being just shit. And it's true. Everyone has shit entries. I have shit entries half the time. But if you're buying off the tightening move, wherever the tightening happens, you can't get stopped out off that immediately. It's just not going to happen. It's impossible, right? It's actually impossible. So this move here, let's just put this on like a slower speed and watch this as this develops here. You've entered. When are we taking profit on this move? Do we need to take profit yet? Let's see. I mean, how many? We're up fucking 5% now. Okay, now we're up 5%. What are we up on options? We're up probably 50%, 60%. We're up maybe 80% now on options, 90%. Okay, we lost some momentum. What are we going to do here? Do we need to get out of here? I know it looks really stupid when I show you on the replay now and you're like, okay, how the fuck could I have not bought this in here? I'm going to pause it. You buy it open. We buy it open. This opening here, if you weren't able to get the trade here, I tried to take the trade here. If you're not able to get the trade here, and this pullback happens, if you're not entering over here because you weren't able to get the entry here, then yes, you're just, you got to grow some and realize that, okay, it's okay to take another trade here. It's okay to take, my other trade here didn't work, but I know it's gapped up 5%. I know it's going to pull back. The market's pulling back. I like to buy on fear. You got to be able to take advantage of when the tightening happens. It's too clear most of the time, especially on this. Guess what, guys? This trade, I talked about, Lyft and Uber are not tied to anything. It's not tied to anything. It's not tied to value, tech, nothing. It's just its own thing. It is a vacuum. This one is a vacuum. You have to be able to take... Now, you could say this trade's in the middle of nowhere. Listen, man. I mean, first of all, you can see all the fucking price in here. I'm going to make it even worse for you guys that didn't do anything. I'm going to bring it over to this Uber trade. Now, I want you to ask yourself whether you can figure out how to enter this trade. Okay, Lyft just gapped up, Uber gapped up. We're going to take the trades together. What's our rule? We buy on support, right? Okay, let's see if we can watch this trade in real time, and figure out when to buy this trade. Let's see, maybe you guys will be off a candle or two, but let's see if you can figure out in live right now, when I hit play here, if you can figure out when to buy this on our rule, which is to buy on support. And also, the Lyft chart's doing the same thing, so you can watch simultaneously when you're doing it. Let's see if we can figure it out. When did you guys say buy? I would have said buy right here. I would have said buy right in here, this tightening here. I would have said buy right in here somewhere, probably right when it broke 55. If I bought options at 55, did I get stopped out over here? Did you get stopped out over here? If you did, then your stop sucks. If you stopped out there, then your stop is terrible. And then you watch price, You watch price go up 5% and you said, well, too bad I bought 5 minutes ago. It's too bad I got stopped out 5 minutes later. Is that what your stop is for? Is that your stop is to stop you from trying to make the trade you're making just so that in hindsight you can say, well, I mean, it's too bad I didn't make that fucking trade? Or no, that just means your stop is terrible. and you probably got stopped out and got filled on fucking a terrible order. You probably lost 10% or something because somebody put their bid down here so you get market ordered. This is really straightforward, guys. We look for a pullback from open into support, and we buy on support. And just two fucking charts that are identical, and you can make the trade together, and one signaled the other. One signaled the other. Again, this Uber chart, we talked about them. When it broke this trend line, we knew we could go buying over here now. We didn't want to buy down here because it's not worth the risk. Now over here it was. Now you can look and say, well, there's not much here. It's only 2.5%. Okay. It's better than your fucking break even or loss on the day. That's for sure. Right? You're going to tell me 100% is not good enough for you? You could have made 100% on either of those. What about these other trades? Right? What about some other trades in here? Was there no possible way on charts that we've been looking at for fucking forever? Again, some of you want to make the difficult trades and make the complex trades. It's like, I think LSU, you asked, I don't even know if you're in here, you asked about trading volatility, right? You don't know volatility, so don't trade it. Trade the simple stuff. Trade the stuff that's really straightforward. What about the SATS chart I posted? This opened and went bid from the start. What about this chart I posted last night? Did you guys even look at the chart? Did you look at the chart? What about this one? That's the 15 there. What about just trading fucking cruise lines again? That you guys have missed for a month. Again, I want to make it clear, these are not difficult trades. All it takes is to hit the button. It just takes the chance to hit the button. It's not always going to work. What about GE? Could you not from the open make this trade? Is there no way? There's no way you could have done it. Is there not at any point, there's no point here where you couldn't hit the buy button, right? And now this has been since 2 weeks ago. These are 100% trades. These are double up your counts. You put your little flimsy $1,000 in there, that's another $1,000. You put your $10,000 in there, that's another $10,000 on top of it, right? In one day. One day, mind you. So again, there's multiple charts like this. Again, I want to make sure that we're looking at everything on a macro sense to have the right angle and to know where to go put our money. Those other macro things shouldn't be dictating when you should be buying and selling. It should be based on price, not how you feel about other things. So when we're looking at, when we're looking at SPY in the morning, now I'm going to show you on the 5 minutes here on like the SPY, when we're watching this at the open here, right? Where are we? There it is. We're watching this, right? We're not using this as saying, well, you know what? It was a good run. We rallied Monday and now we're crashing today. we can't be fucking rallying and crashing every other day, guys. It's too much, okay? And even if you were watching this, there's no excuse because as soon as this 10 o'clock came in, it started to turn this way, which is when everything started to move together anyway. So again, all of these things tied together, we use this as decision making, but look at volatility here. Volatility spiked from yields and then also at 10 started to pull back. Again, we buy at the top of volatility. Buy when the VIX is high, sell when it's low. These kind of ideas should not be hurting you. They should not be holding you back. That's for sure. You're only holding yourself back, which again is experience, so you don't need to feel bad. But I want to make sure it's there and it sticks out that, again, these trades are there for you to make. Fox yesterday and today. It just means you didn't look at the chart because, again, these options, go look at the options, see what you could have made. There is not a real reason why you can't be making the trade. There's not a real reason because if you're just watching price and you're not taking anything else into account, it's really fucking straightforward. And if you make it maybe more into a game and not fucking I treat everything as life and death. And I'll be like, I got to make this right now. I got to make this decision right now. And I treat it as like a very serious thing. Maybe some of you need to like tone that back and turn it into like, okay, it's just a trade. It's just a trade. It's not possible for you to hit the buy button and lose all your money right that moment. It's impossible. You can always take it back. I promise you can take it back, right? You can take it back. But if you don't fucking do it and you never hit the button, there's nothing to take back and there's nothing to gain there either, right? Those decisions that you didn't, those trades that you didn't make, you'll never be able to make them, right? Now, there's trades every single day. But if you keep missing them, you're going to get more and more put into that, and you're just not going to be cut out for doing it, right? I've told plenty of you, you're just not cut out for it. Be mad about it. You're just not cut out for it. It's not going to happen. Just not going to happen, right? You got to stick with the simple things here and make these happen. Make the trades happen. And the only thing you got to do is one thing, is just to hit the fucking button. You just have to hit the button, and that's it. This trade is 100% trade. If you just made it even a day trade, it's 100%. Hopefully that stirs some people up. A little bit. We'll see. Now, let's talk about the rest of the week. So tomorrow, we have OPEC meeting. OPEC, we're going to get some ideas on crude. Now, oil's been continuing to move, so the bet is that prices will continue, that they will continue. They've been trending up. We talked about it over here, the rollover. We were expecting a possible rollover here. What happened over here? We went full value. Reinflation, economy opening back up. So that basically wrote off any idea of crude coming down. This is just retracing. We've retraced to the January high was for crude. This is continuing. It's going to be important because if it fucking gets, they're not going to stop the trend. It's just like Powell's not going to say anything to make the markets crash. So betting on Powell making the market crash is literally stupid. But the same thing with this here. They're not going to implode the price of crude. This is just not going to happen. Why would OPEC do that? Why would they implode the price? It doesn't make any sense. They have a fucking cartel. They control it. They're not going to be that ridiculous, right? But it is a little bit of an event in an understanding that future value matters. It's not the price now, it's the future value, right? So we want to see how much it's going to cut into the price of the now for the future value, right? And we have Powell speaking. What's the biggest thing going on right now? It's yields. It's yields right now. They really jumped up quite a bit again today. Let me actually open up one of these charts here and show you. For instance, let me make sure you guys can, you can see it. I have to click it through there because it doesn't open up on the other one. So what did we get? We got the spike here on Thursday. It spiked up again today. Does it look like this here? Or do you think that this is just that bounce back sort of thing that we see in price all together, right? All together, right? This is what a yield chart looks like. This is the 2-year yield, for those of you that don't know. You want to look at the 10-year? Let me show you. Wait, let's do the 5. Let me show you the 5. The 5 is a little bit more important. This move here, right? Everything's going to come down to tomorrow because either we're going to know that this is a good thing. Now, what does this look like? It looks like this is going up when all of our value trades are going up, right? Exactly. This is actually good for our value trade, but it's also fine if it comes down. Powell's going to basically speak about tomorrow whether or not this spike here is something to worry about. Now, before, what did he say? He said over here that this rise was actually good, that it was actually good for the economy in showing, in proof, confirmation that inflation is getting going and that his target over 2% is happening. And the big question tied to this is rates. Are you going to increase rates sooner? And they said, we're not going to change rates until our fucking mandates are met, which is full employment and that the economy is getting back going, which we are going to basically use the 2% inflation idea behind it because our inflation is pretty low right now, right? What benefits from rates? Banks do. So banks are getting some fundamental ideas from the rates coming back sooner, but they're also getting bumped up just because of the reinflation idea and that value is doing well. As a whole, economy opening up, they can fucking give out more loans. Guess what? If the yield's up on treasuries, the cost of capital goes up. Costs more to borrow. That's the reality there, right? You don't need to understand this stuff. It's okay. It's okay. I don't care if you understand it or not. The point being, there's a side that we're trading on. Don't try to force tech. We're short tech, long value. That's what you need to know. That's what you need to know. You don't need to short tech if you don't want to, but you can't be going long on it. Can't be going long on it, right? Tomorrow we're going to break down the Powell thing. There's going to be neutrality leading into the day. I'm surprised there wasn't as much neutrality today. This is rotation, instant pricing. The market wants to instantly price everything right now, right? We've been talking about that idea. The market wants to instantly price things. And the volatility spikes. Why is volatility spiking? Is it because of fear that the market's going to fucking crash and we're all going to die? That's not what it's for. The volatility is spiking because there's rotations happening in the market, which were not planned beforehand. They just weren't planned beforehand. So there's volatility. What does volatility signify? What does IV signify? It means that there's going to be a price move in the future, up or down. Up or down. Not just down and down and down. Maybe on tech. I mean, we hope so. Fuck Facebook. But again, none of us are trading on this side. None of us are trading on this side. Even those of you that wanted to make Facebook happen, if you didn't get stopped out of this trade, then how did you get stopped out of the trades that are going up 10% a day? Right? How are you making dumb trades that don't get stopped out, but you're not able to make the trades that are very straightforward? Right? Some of you need to remove the stops, mental stop it. You making a decision to buy something, then trust in what you're buying it for. Right? You shouldn't be getting stopped out immediately. That's just silly. And it's silly to use it as an excuse. It's silly to say, well, things are volatile. I don't know. Then just remove yourself then. Remove yourself from the equation, right? Remove yourself from the equations. Just remove that. It's okay. If you don't feel like you can do something, then remove it, and then there's nothing, you're not gaining or losing anything because you're not being a part of the market right now. If right now is a difficult time for you and you don't think you can do it, then remove yourself. None of you are doing bad, but I'm using it as sort of an extreme sort of one or the other. You either need to trade it because you're watching price and being a part of it, or you need to remove yourself and don't be a part of it. Don't trade at all. Because when you do make decisions, you're going to probably get yourself hurt by making a dumb trade because you're trying to make something else happen that it's not. Because those people that are trading on the right side, right? There's just too many straightforward trades in terms of trends. Again, when I look at some of these other trades, right? When we look at some of these trades, it's like, if you're not able to get this trend here, right, then what are you doing? You're trying to force something else that's trending down. You're going to get the pullback, holding it for long term. It's just not a good excuse. So otherwise, if you're not going to trade these trends, then don't trade anything, right? That's the reality, because there's not always, you can't trade everything. Not everything is good all the time, right? Not everything is good all the time. And what do you do on positions that you are up in profit and maybe signaled that, well, they're not putting as many points on? You need to be making decisions based off of your positions, and so you need to be mindful of yourselves. You know when you're going to be taking profit too early, or if based on when a price moves happens, you'll get out of the position. And if you're in short terms or long term options, if you're in short term options, you're a lot more sensitive, right? Larger price moves, or price moves affect your options a lot more. So if you're in Marches, you're taking profit a lot earlier. And if you're in long term, you need to push those and stop getting out of them so quickly and then getting no profit off them. Those of you that have been, a good example is some of these charts that have been doing very well this week, volatility. Some of you are buying really long-term options and then taking profit on that when all you could have just bought Marches or something like that. If you knew you were going to be exiting, then why didn't you just get the 100% there instead of just making like 5%? That's a you thing where you're probably making the trade, but then you're just not in the right contract. So again, I'm going to have that video on options. I think it is. I'm going to have it done tonight. I'm going to make sure it's done tonight. So we don't have to go over so many basic things all the time. That way, again, if you're going to make a trade and you're likely going to be out of it by the next day, you make a trade on Friday, you're going to be out of it on Monday, then
There's no point in buying fucking June contracts. Buy the Marches. Get the 100% right now. April's, get the 100% right now and take profit on it. Don't go get 10% on it. Hold it for the next 2 days, and then because it was 2 take profit days in a row, you took profit on the contract at like 2%. That's silly. Doesn't make any sense. You're wasting time and money, and you're wasting, what you're trying to do here, which is not only to learn, but you're trying to fucking make money and not waste your time, right? Those are the kind of things where these are your things, and maybe sometimes you don't know what's going to happen. So it's like, well, it could have turned into a big trade, sure. But if you're going to be limiting yourself from that trade every single time, then you need to wait until you've learned enough to know when not to be doing that, right? We get in our way all the time. I get in the way. Obviously some of you have that revenge trading thing where you're down on the week, so then you got to make something happen. You're like, well, listen, man, I'm down $2,000. I need to make back $2,000 right now. And you do that. I don't really have that, but I'll do things where if I'm up a lot, now I feel like I can be more risky. I'll go, oh, I got some risk to spend because I just made like 20% on something. I'm like, oh, I've got some risks to spend. Let me go spend some risk. And then I make a dumb trade instead of I could just be consistent with that and just continue to make. These are the kind of things that we have to remove and stick to just being disciplined, right? We have a good method. We have a good strategy, right? Stick with it. Don't try to make something else work, right? Anyways, we've got confirmation of our ideas. Those of you in position, again, we make, you know if you're going to have to take profit tomorrow, you're going to take profit on Friday. You know the cycle of things, right? For going to next week, based on what we saw today, we are certainly, this is going to be my last thing going into the day, okay, going on some other things. This certainly, we're only as strong as our weakest link on an average, again, for the average. So even things like the Dow that I talked about doing well, the small caps have been doing well. They can't do well in a vacuum. They do need, individual tickers can, but the market averages, the indexes, they do need everything to be trending together. If this is going to be a problem, then they're not going to do well. They're not going to do well. So again, tomorrow is probably going to cover up most of this issue. So those of you that haven't been in position and you don't know, then you can wait for clarity tomorrow on your end. We sort of already know what people are going to make for decisions. So tomorrow is going to be important. If it goes bid again, I do not want to see, oh, we're rallying. This is the crash. This is a rally. This is the crash. This is a rally. Again, it looks like they were doing that back and forth, but aren't we just doing the same thing this whole time? Isn't it just the same thing? Isn't it just this? Wouldn't this just be the same thing as sideways trading if it wasn't for all the back and forth here? It's the same thing. I would remove yourself in what you're thinking about from any of this price action here. If again you don't, you got to think into the future. So if you're looking at this as the now and not looking at where price is going to be out here somewhere, then there's no point of even looking at it to begin with, right? We're not trading this. Don't, just remove it, right? Remove it. SFM opportunity. Retail stores looks like the same supply thing. It actually took off a couple more times. Looks pretty good. Yeah, looks pretty good. I haven't looked at this chart in a while. Did we have vol? We didn't have volume reasons. It certainly tightened, and I do like the moves like this where again we have this rally into tightening, sideways trading, the volatility from last week adding a lot of vol, tightening, breakout here today. If it breaks this level up here, what is this over here? 23 and a quarter or so. That looks like it's probably supply. I mean, this is the supply up here, of course, but yeah, it's definitely an opportunity. I mean, you could have, I don't know what it looked like today. I didn't really look. I mean, there you go. I mean, if you were looking at the chart from open, you knew it would, like, so again, if you look at charts and you just know what the price is doing, okay, it tightened over the last 2 days. We had significant volatility the days before, swinging back and forth, tightened. All you're doing is looking for direction. You have equilibrium, you look for direction. If you were watching this at open, you would have thought it was bid from open and you could have bought it. Absolutely. Does that mean you can't buy now? No, you'll have another chance, but now you have to wait for a break. You have to wait for a break in here. Wait for a break in here. That's enough points. You have about 4.5% until the next level, which does stem back from up in here. Certainly possible. Certainly possible. How do you manage this from tomorrow? I mean, there's going to be more volatility. I mean, it's either going to be a question of volatility is completely gone by tomorrow, or it continues. One of those two is going to allow for price movement. There's some supply. Certainly have that level there to use as a guide, as a guide for a plan there. I mean, if this would have been, if you're watching today, it's just like all the other charts that we've talked about, where this tightening happened, the volatility of last week, the tightening, and then the move, just like we took advantage of today, yesterday, and Monday, right? I do expect a lot of these to continue. Charts that put a lot of points on today, like could something like, think about like this, like does CCL continue tomorrow? Does CCL continue tomorrow? Something like this. I mean, it got rejected on the trend line today. Is it still trending to the upside? Absolutely. So if you're in long terms, you just keep pushing this trade until it's not there anymore. We buy on pullbacks. Keep pushing it. Take profit when the time is there. Could you have taken profit today and been happy with it? Yes. If you were in short terms and you took profit, you could have been happy. That's fine. Do we continue to push these? Yes. We continue to push trades, and again, I'll just keep using these as the benchmark, energy, banks. Do you keep pushing this trade? Yes. How well did this do today? It did the best. What's the number 1 and number 2 sector? Energy and then banks. It seems weird, and again, like you guys were joking about earlier, it's not sexy, but guess what? Making 50-60% a day on your options is. So, I'm sorry, but, even Boeing, you could have made money on Boeing, which was a dog for fucking months and was a dog for a year. Even this has sector convergence and is good. It's good. Be a part of this move. If you're not being a part of the obvious moves, oof. It's tough. It's tough. I don't want to beat the drum anymore. So again, the sectors. If you need me to type the sectors out, or something like that. I guess that's a thing, but I will let you know there is this thing I've got where I post the tickers into this channel on Discord. So those of you that are members, you've got the fucking tickers there. You know them. People talk about them. I'll repost the list. I'll repost the notepad thing so you can put it into your trading view. I'll remove some of the shit ones. But again, you have the tickers. All you have to do is the homework at night. I also, in the morning, pre-market, that first 30 minutes, I signal which tickers we're looking at, which are bullish. That usually gives at least 3-4 alerts of what you can be watching and making for trades, right? So again, no excuses. Just put a little bit more time into looking at charts. UPS, FedEx, they still are bullish into this area down. You're getting obvious diamond vibe, like an obvious diamond vibe down here, but it doesn't really have a trend into it. It just keeps consolidating. Is there anything here? No, there's just fucking nothing here. It needs to make a move before you can do anything. The volatility is not helping it. There's nothing here. Now, what about FedEx? FedEx is a different story. This elevation through the supply, there's something clear here. This is volatility. It's moved back and forth. It gives a chance. That UPS is gross. Leave that chart alone. Look at the FedEx chart. Use the FedEx chart. The level's still there. Now, if you entered from this dip here, or you entered from Friday last week when we were talking about it, you're still up in your position and you can keep pushing that. You're not pushing it for much longer. If it doesn't break out, if it doesn't break come Friday, then you're probably not pushing that further, and you get stopped out if you get stopped out. These will make the move if it breaks the supply, but again, these are they're not getting help from anything, but also they're getting hurt from the demand coming out of the market. So these kind of things still do affect to a bit. And so again, the volatility didn't really help here. Besides from Friday, you got the gain. If you were in that position, you probably already took profit from the level here. How do we enter it? If it's above and makes a move, you take the entry, or if it has a big pullback. You need the movement. You can't just be dicking around side to side. UPS is too. There's no movement. You're going to sit in that position to do nothing for fucking ever. If it breaks and goes, well, then that's movement. I would let it move a couple percent. Let it actually go a couple percent. Miss the percent or two. Just miss it. Let it go. And then go trade it. Trying to buy it on every support over here when it's just dicking around is not good. We like to enter. We enter on support when the move is an actual move. When it actually comes, ticks, wicks into it, and then goes. Not when the trade is going back and forth through, sometimes bouncing, sometimes going. This is not good, and you can tell. Why? Because look at this chart. It's already doing that. It's already doing that. There's always an example of beforehand on price of whether it does that or not, right? You could always be like, well, look at this, did that, and then it finally went. Did it, though? Did it? No, not really. Not in the swing trade mentality. Yeah, there's a difference between this candle and you can fucking see it. You don't have that in any of these. You would need to see it. It's got to be there. I'm not going to put my eyes on it unless the move is happening. Got other great things to look at, right? A lot of great things to look at in terms of charts. I don't know what's LSU saying in here. Awesome. Okay. Okay. Good stuff. Great. Anyways, keep looking at the charts I post. I am gonna do something. What you guys should be doing again is the best way to learn this shit is when I post the chart, right? I post the chart, you go fucking copy it. Go copy the chart onto your chart. Those of you that are lazy and don't want to do this, but you want the fucking levels and you don't want to keep looking at the pictures, I can share with you my layout. Hopefully I'm not sharing anything sensitive here. I can share the layout and it will give you all of my charts. How many charts? Well, I'm maxed out, so I have to keep deleting the old ones. So we're at the 15,500 charts. If you want to purchase all of my charts and you do not want to have to fucking copy the lines every day, and you don't think it's a good learning opportunity, you think it's a waste of time, and you just want the level so you can make some money, then I will sell you my layout. I have to sell you it because I think it slows me down a little bit, so I'm gonna have to like dedicate a little bit of a little bit of server space to it. Maybe $20, $30, maybe $100. I haven't really figured it out yet. But if you're interested and you want to buy my charts, maybe bid and you let me know. And all I have to do is share the layout with you, and you copy the layout, and every time I post charts, I'll just send you the new link. You can use it at any time, move around the drawings, but it's just, it'll only have all the old drawings. So every time I create a new one, it won't update. I'll have to just send you a new link. Only one link, every week or whatever, and it will fucking have all the updated ones. So if that's something you want, you let me know. But again, the learning that you should be doing is, okay, here's the move. Let me copy these lines in, put my fucking line in, be like, okay, so here's where I buy, because I buy above the level. Again, if you're not using the charts properly, that's what I offer. I offer you to be on the right side of the market and offer some pretty fucking clear charts. You got to use them, because otherwise there's nothing to use from me other than me just being an asshole, right? Just an asshole. So you guys let me know if you want them. I will share them. I've already attempted it before. It works. So, yeah, I'll let the bidding start at $20. I'm guessing about one-time fee, maybe 50. I'd like to squeeze 100 if I can. You guys let me know. You guys let me know. Have a great night, morning, evening, wherever you are. Got quite a bit of shit coming out tonight. Watch out for the video. I'll see you in the morning. Have a good one, guys. Oh, and tell me about the goddamn YouTube thing, if you like it or not. If not, we'll go back to Discord and I'll give them Discord a call. Make sure they fix that shit. See ya.